is an investor who knows what they are doing. Not just you hear people saying this stock is moving or this stock, that made me rich, go and buy it. Then you buy it, then you get stuck. No, so what we simply mean by intentional investor is you know why you bought it in the first place. You saw the reasons why this stock was a buy. You saw the reasons why this stock is a sell. You buy, you sell based on your intentional reasons, not just based on hearsays. So the class is quite a straightforward class. You will learn the introduction to investment. So all the whats and whys and hows, you learn them all. You will learn the different asset classes you can invest in, why you should invest in them, and what you should watch out for. That is in terms of risk. So we'll be looking at stocks, mutual funds, real estate investment trusts, commercial papers, and the rest of them. You will learn some basic portfolio construction tips. Then, as a bonus, we'll show you how to search for stocks that are suitable for yourself as a newbie investor. So, this content or curriculum may look long, but trust me, it is not long at all. It is very, very short. We in Access What we are time cautious. That is why we decided to start immediately, even if Joshua was not here yet. We are very, very time cautious. We don't spend more than the time allocated, right? And this class is also a practical class. So if you follow up, you will learn not just theories, you see in real time how to do some of these things by yourself. Thank you. However, if for any reason you still need help, first of all, you can ask your questions in the community. But let's say maybe you want to invest for the long term, or you want to invest for your child, or you want to invest, you still need this personal guidance. You can contact Benita or myself. These are our phone numbers here. We are both chartered stockbrokers. We are not just licensed, we are chartered, right? To practice stockbroking, to practice investment advisory here in Nigeria, as well as financial management. So if you need the personal consultations, you can reach out to Benita or myself, and you'll be in good hands. But just to help us, so we won't be attending to thousands of people at once, right? We encourage you that before you reach out to us, already have this in mind that you have to be a long-term investor. So we do not give the personal guidance to people who want to buy and sell, within a few days to weeks, because it means you have to come back, right? Then secondly, you have to be an annual subscriber in the Access What platform. Thank you. So let's get started. What is investing? Investing is simply delayed gratification. So you spend your money today, but not for the purpose of consumption, but for the purpose of that extra rewards that comes out of it. Let me give you an example. Somebody bought bread to eat. Another person bought bread to sell. Now that money these two persons used to buy the bread, one was spent for consumption, another one was invested. Now, what is the difference between investing and saving? Because both investing and saving has to do with the fact that you are letting go of your money, you are letting go of your capital, you are letting go of your resource, but you are not consuming it immediately. That is where the gratification comes here. So the gratification has to do with what you are letting go, right, will be smaller than what will come back to you. In other words, what the person who bought the bread for the purpose of selling, by the time the money comes back, that money should be more than what the person puts in the first place, right? So that is simply what investing is all about. Why do we invest? Some of us who started working, especially for the young ones, I believe that some of us who think of, we all face this scenario where you start investing, sorry, not investing, you start making money today. But before the end of the month, your money has finished. You do not know what you spent the money on, right? That is simply because you spent the money anyhow, simply put. So you cannot remember. It's not as if you don't know, you can't remember, but you indeed spent the money. But what if at the start of the month, at the beginning of the month, you invested this money, maybe 20% of your funds, you invested it. You see that even if you spend it anyhow, the remaining one, you'll be thankful for what you invest in. We still have the thing about beating inflation, right? A piece of bread can be worth 1,000 naira today. By this time next year, that same bread may be worth 1,200, which is like a 20% increment. Now, if you save your 1,000 naira today, and by this time next year, your 1,000 naira in the bank is still 1,000 naira, or maybe the banks have deducted some, so it's now 980 naira, for example. It means that the same bread you would have used that money to buy today, you cannot use that same money to buy the same bread next year. So what happened is that you actually lost the value of your money, right? You got poorer, simply put. So the only way to help you beat inflation so you are not becoming poor without knowing is when you invest. At the very minimum, you want to invest in a security that can help you beat inflation. So by the time the bread has increased from 1,000 to 1,200, your 1,000 naira has increased from 1,000 to maybe 1,210, 1,250. So it is that extra 10 naira or 15 naira that is the extra wealth that is being created, not necessarily the 200 naira lost from inflation. I don't know if that makes sense. We also have the thing about retirement. This one is very important, especially for you if you are not employed in any government agency or large corporation. Because people who are employed to the government or large corporations, they automatically have pension plans, right? Now, yourself, you are a self-employed person. The question now is that what are you doing to prepare yourself for retirement? Because at the end of the other people's career, their pension is waiting for them. So what is waiting for you? It has to be your investments, plus a whole lot more reasons why. Now, how do you invest? There are good, bad, and ugly ways to invest. At the barest minimum, you can borrow somebody money. That is investment. If the person tells you that it will bring interest back to you. Now you may want to wonder, how is that investment? Yeah, because you can also borrow government money through treasury bills or government bonds. You can borrow companies money through commercial papers or corporate bonds. Likewise, you can borrow money to an individual, your brother, your sister, etc. If the person pays back, then the person gives you extra interest. That is investment. You could go to a store nearby, somebody, you see that this person, maybe she's a woman, and you saw that this person has skills, the way she speaks with customers. You believe that this is the expertise needed to run a much larger shop or whatever the industry is. So you tell this woman, let me invest in your business. Then at the end of the year, at the end of every year, this is how much you give me back. So by how much you are talking about the interest plus a little bit part of the capital. If the person continue doing it, the person will be giving some money back to you, right? That is investment. But yeah, so that is basically investment. Or you buy lands, you sell it more expensive. That is investment. That's it. Now, we do not want to look at all these unconventional asset classes because, as I've just shown to you, there are 1,000,001 ways to invest. So let's look at the conventional asset classes that you can invest in. Number one, they are regulated. Number two, and most importantly, you have a fair guarantee of getting your capital back. What I mean now is that if you borrow your sibling money, how likely will you get your capital back? You understand? So some examples are stocks, bonds, treasury bills, mutual funds. There are more that we'll discuss, but I just decided to highlight these four for now. So let's look at stocks, right? Stocks will simply give you part ownership in a company. So in the case of okay, we use an example of a woman. In the case of the woman who you want to invest in a business, right? You can't necessarily say that you have a stock in a company. Why? Because it's like you borrowed this person the money that every year, this is what you will pay me back. And this payment has to do with both the interest from the capital you give to her, then parts of the capital, right? So you can't necessarily say you have the stock. But if you say, okay, let's do it as a form of partnership, right? I'll give you the money. I'll give you the money to let's build this store. I'll give you the money. Then at the end of the year, you are not paying me back. We will share from the profits that comes from this business. Or if it's a loss, we share it together. In that case, you are now a part owner. That is, you are a stockholder, a shareholder in the company. Likewise, in the capital markets, you can invest in stock of publicly listed companies. So when a company in Nigeria, for example, it ends with PLC, GTCO PLC, UBA PLC, First Holdco PLC, as the case may be. So that company is publicly listed. If that is the case, you can own a stock in the company. Bonds is when you borrow your money out. If you are borrowing this money to the government for the long term, it's called government or treasury bonds. If you are borrowing it to a company, it's called corporate bonds. For those who follow the international markets, you saw the news 2 weeks ago where Google, this your normal Google, they wanted to borrow, I think hundreds, I forgot. No, okay, they wanted to borrow $20 billion, right? For I think 100 years, as the case may be. But the market gave them 100 billion. So that is a corporate bond. Now, treasury bill is simply a government bond that is short term and it is not, yeah, that's sorry. Treasury bills are short term government bond within a year, right? Within a year. So let's say 90 days, 270 days, 360 days, as the case may be. They'll give you back your money. The counterpart of treasury bills, but in the case of the corporate world, is now commercial papers. So commercial papers are simply corporate bonds that will be paid back to you within a year plus interest. Now we have mutual funds. Mutual funds are investment vehicles that they help you invest in multiple asset classes at once. So if you want to buy a stock, for example, but you do not know which stock to buy, you can buy a mutual fund that tracks multiple stocks. So for example, we have stocks in the NGX 30. These are the 30 largest stocks in the country, right? Now you can look for a mutual fund that buys NGX 30 stocks, or you can look for a mutual fund that buys Sharia stocks, as the case may be. Let me tell you what I mean, because there are types of mutual funds, right? If the mutual fund is a fund that mostly invests in treasury bills, commercial papers, and other very short-term securities, it is a money market fund. If the mutual fund mostly invests in stocks, it is an equity fund. If the mutual fund mostly invest in real estate, such as they buy lands, they buy infrastructure, they buy buildings, then they rent it out or they sell afterwards, it is a real estate investment trust or an infrastructure fund. So infrastructure fund has to do with infrastructure, such as the construction of railway, the construction of a mast for networks, etc. Right? So we have real estate investment trust, we have infrastructure funds. Balanced funds and mutual funds are mostly invest in a mix of equities and bonds. We have ethical funds who look for funds that use the money for goods, or they simply do not use the money for bad. So an example is if there's a company that produces weapons of massive destruction, an ethical fund or an ethical investor will not invest in such funds or such a company. We have Sharia compliance funds. If you are a Muslim and you care about your faith, you do not want to buy the stock of companies that, for example, rear pigs. You do not want to buy the stock of companies that their major operations are lending for the purpose of interest, right? So you want to invest in halal securities, such as companies that are halal, they produce halal products, right? Or you want to invest in funds that invest in these stocks. And we have other type of asset classes that you can invest in. For example, there are commodities such as gold and silver, so you can actually buy them. We have commercial papers, cryptocurrencies, etc. Now, take note of these cautions because these are real life cautions. They are not theoretical. We have the liquidity risk. How quickly can you enter or leave a trade? Let me tell you what I mean. If, for example, the shop that you invested in, now I do not mean you borrow anymore, you invested in the shop in your street. But now you have something very important you want to use the money for. The question is that how quickly can you sell your stake in that company to another person? For example, in the capital market in Nigeria, when you buy a stock and you are the owner of that stock, you can sell the stock. However, there are some stocks that still have liquidity problems. So please look at my screen. Let me show you how to get all that, right? Yes. So if you already have the stock in your mind, this is the AccessWorks platform, just in case. If you already have the stock in your mind, right, search for it. So maybe let's look for BUA Foods because I love using BUA Foods as an example. Okay. Yeah. Apologies if it doesn't look. First of all, we are seeing a flag. So when you see this flag, yeah, click on it. It says BUA Food is an illiquid asset. Illiquid. There are not enough shares available for the market to buy or sell easily. What does this mean? Still scroll down under this price statistics section, right? Click on view more. See, BUA Foods has around 18
Hello, Wilson. Can you mute Wando?
billion shares. BUA Foods has 18 billion shares. Out of 18 billion shares, only 4.73% is available to be traded in the market. That is, BUA Foods has only 850.58 million shares that the public, the investing public can easily buy or sell. What happened to the remaining 97%, for example? So remember, BUA Foods is owned by, so we have some board members such as Rabiu, that is the main founder, the managing director. We have some partners, etc. Or we have some insiders in the company. So by the time you remove the shares that the real owners, the management, etc., by the time you remove the shares that they have, the remaining one that the investing public can quickly buy or sell is 4.73%. As a rule of thought, right? You want this free float to be at least 15%. Usually, for me, I look at 20% and above. Let's take another example. Let's look at okay, let's look at Wema Bank, for example, right? Then view more. So the free float percent of Wema Bank. Recall, like when you come here, look at this price statistics. This where you click view more, right? So Wema Bank free float is 37.29%. Now, just in case you do not know the stock that you want to buy yet, for you to check the free float, you can simply come to this research tab, select Hall of Fame, right? Then select, instead of market capitalization, select free floats. Then you can come to lowest to highest. So this BAP PLC, right? As you can see, 0%. Ronkers, 0%. Infinity, 1.2, 1.3%. BUA Cement, 2.3%. As you can see, some stocks have low liquidity. So just imagine somebody now, an influencer telling you to buy stocks that will get your money stuck. Let's look at Geregu because people always talk about Geregu a lot, right? When you come here, click on view more. See, it's even 18, it's even high, but at the same time, when you buy it, you may almost cry before you sell it. Now, that is one risk. You also have the credit risk, right? This is the likelihoods that a bond that you buy or a commercial paper that you buy, simply put, the likelihoods that when you borrow money, you do not get your money back. That is why before you buy any commercial paper, right, you want to check the ratings, the credit ratings to ensure that they are suitable for you, right? Now, lack of understanding. Some of you will invest in a company because people are investing in it, not necessarily because you understand the company. As a rule of thought, you only want to invest for as a newbie investor, since you are just starting, only invest in companies that you know. There are many of them, and we will do a practical for you to see some of them, right? Thank you. Now, what are some basic portfolio construction? For now, I'm just giving you these tips for now as newbies, right? If you have, for example, 100,000, 1 million, 10 million, 10,000, whatever amount you want to start investing with, right? Ensure that no asset class has over 75% of that money. So by asset classes, I mean stocks, bonds, ETFs, mutual funds, commercial papers, etc. If you put all your money in bonds, for example, then stocks are doing very, very well. You may regret it. If you put all your money in stocks, for example, then the stock market crashes. You may regret it. So by the time you diversify, you put some money here, you put some money there, you see that when this asset class is doing well and the other asset class is not doing well, your entire portfolio will behave on average, not necessarily not doing well, like just one asset class. Now, even in stocks, you want to invest in multiple industries. Please come to the Hall of Fame page again, right? And now you can select industry. These are the industries in Nigeria, in the Nigerian capital market. We have agricultural services that looks at Presco, Como Oil, Dela Lakes, etc. here. We have conglomerates, construction, real estate, consumer goods, financial services, ICT, etc. So you can see the industries there. Now, even in an industry, you can also diversify across market cap. For example, let's look at banks, for example. We have the largest banks, which are First Bank, UBA, GTCO, Access Corporation, and Zenith Bank. For those already in the market, you know exactly why I called it at the order that I called it. The phrase is FUGAZ, FUGAZ. First Bank, UBA, GT Bank, Access Corporation, and Zenith Bank. These are the large banks. Now we have some other smaller banks, which, if we want to tell ourselves the truth, they are now cashing up, right? We have Wema Bank, we have Fidelity Bank, Union Bank, Polaris, etc. Sterling, FCMB. Now, you may want to diversify by invest first of all in a large, then in a smaller one as well. The reason is simple. When a stock is a small cap, that stock is likely more volatile. So you may get potentially higher returns. So what we mean is that if you buy something at 1 naira, the thing becomes 2 naira, you have 100% increment. As opposed to buying it at 100 naira, then it becomes 101 naira. It is the same one naira that added to all of them, but in one case you get 100%, in another case you get 1%. Do you understand? So that is why you may diversify across market caps, even in the same industry. You also want to diversify across countries. Yeah, you want to invest for both capital appreciation and dividend income. So what this means is that some investors buy stocks so that the stock will increase in value, then they sell. Others, especially for long-term investors, they buy stocks so that the company will pay them dividends, or they buy bonds for the purpose of coupons. Now, if that is the case, you have two metrics that will interest you, right? For this Hall of Fame, you either select effective yields to look at the yield at which, sorry, coming back to all, to look at the yield at which some stocks have been moving in their price. So mind you, all these numbers you are seeing here are based on historical numbers. I'll tell you what I mean pretty soon. So for example, let's look at TIP, right? That is the initiate. So you have the observed effective yields here, which is 158%. You also have the dividend yield, which is 2.5%. Looking at these observed effective yields, say 4 years. So please take a look at this. In 1 year, this stock, the initiate, in 1 year has made 353.49%. But the question now is that, is this sustainable? So from February 21st down to February 21st, 2025 to February 21st, 2026, the initiate made 353%. What about from February 21st, 2024 to February 21st, 2025? Or from February 21st, 2023 to February 21st, 2024? So as you can see, Access using real-time numbers. So even when we go to tomorrow, this number will be different. This number will be different. Now, the average of all the annual returns that the initiate is looking on real time. I don't mean arithmetic average though. I mean the capital annual growth rate. That is this 158%. But I can simply tell you that it's the average. Now, what is the likelihood that instead of the initiate price to go up, it comes down, it falls down 177.15%. So it is higher than the risk exposure. So you can say that this stock is somewhat of a high risk stock. Then the dividend yield is 2.5%. So if you had invested in this stock exactly 1 year ago, you would have gotten 2.5% of your money back, right? So now this is it. So if you care much about capital appreciation, you want to look at the effective yield. If you care about dividend payments, you want to look at dividend yield. Right. Now, stocks for a beginner such as yourself. Please look at do you look at the book I am holding? I don't know if you know this book, The Intelligent Investor by Benjamin Graham, right? If you have the book, you can open to pages 184, right, to 185. There are actually some, not what is on the screen, but I just wanted to show you an example. There are some metrics that this author tells a passive investor, because you as a beginner investor, as you are just beginning, you do not want to be aggressive in the markets, right? You want to be passive, at least sit down and look to know what is happening first before you go all in. So there are some stocks that this author recommends to you, right? The first one is the adequate size of the enterprise. The author actually recommended that the company makes at least $100 million in revenue annually, or 50 million in total assets, right? So total assets of at least $50 million and total revenue, annual revenue of at least $100 million, right? So what this does is that he is advising you that you should go for a large cap company. So an example of a large cap company in Nigeria here is MTN. Now, see what happened 2 years ago. Remember when this administration, they floated the dollar, the naira. So naira moved from around 400 up to close to 1.8 at the time. But a company such as MTN, considering that they are the subsidiary of the MTN group, so they mostly deal with dollars. So just imagine that the MTN group, they had, for example, $100 million in debt. When dollar was 400 naira, do the calculation. Then do the same calculation when that same $100 million increases to 1,800 naira per dollar. As you can see, their debt, they did not take more debt, but their debt values significantly increased. That is why MTN made a loss in the year 2023. That is also why the government had to give that industry the permission to increase the price of data, to increase the price of calls, everything, so they can offset the debt. Do you understand? So had it been MTN, Airtel, etc., they are not very large companies. They are very small companies. The question now is that, would the government still have helped them? How likely would the government want to go all in to help very small companies? So as a new investor, if you invest in very large companies, there is one form of risk that the government will help you manage, first of all. That is what this author was. You can actually go through this book, pages 184 and 185 here, right? But now I still have some tips for you. So the question is that how can you find these stocks? Let us first of all use this man's own examples, right? Please look at my screen, please. Same in this research tab. Visit the fundamental analysis page, right? You can search for any specific stock. So for example, specific assets. So let's look at Presco, right? So this is Presco. It says fundamentally 100%. We are currently using our Access What own screener, right? But let's use Benjamin Graham's this book. We created a screener from this book for you. So Benjamin Graham's screener, it says the Presco is 85.7% fundamentally right. And what failed here? While the revenue, it beat it. The total asset, it beat it. The other ratios, it beat it. The PE ratio here. So Benjamin Graham may say that Presco is now currently a bit overpriced, considering its earning that we should wait a bit, right? Or if you want to look for all the stocks that passes, right? Simply come to general markets, right? Select choose template, then select the Benjamin Graham's passive screener, which is here. So look at Aradel, for example. It is large cap. Look at its revenue, look at its total assets, look at its PE ratio. They are still within range. So it is a pass. Or if you care about the US stock market, simply scroll back up, then select the United States, right? You will see the stocks that pass. So look at Google, look at Meta, etc. They are here. But here in this slide, we actually show you some metrics that you can use. So let's do this for ourselves, right? So we say the market capitalization of the stock should be greater than 500 billion. So for us to get that one, come to custom screener here, right? So we say market capitalization here in comparison, which is greater than 500 billion. So 500,000 million billion. So market cap greater than 500 billion. The another one, the revenue growth rate should be greater than 5%. So search for revenue growth. Look at the revenue growth, CAGR. That's CAGR is simply compound annual growth rate. Now we say it should be greater than 5%. Add another field. We say the profit margin should be greater than 10%. So profit margin, right, in comparison should be greater than or equal to 10%. Another one, because of time, let's just add one more, right? The PE. So let's say the PE is less than no, for the purpose of this class, let's do what is right. So yes, the PE in comparison should be less than or equal to 15. What again? Return on equity greater than 5%. So return on equity greater than or equal to 5%. The price to book ratio, right? Comparison less than or equal to 5%. What more is there? We have the debt to equity ratio less than 1.5%. So let's look for debt to equity ratio, right? I'll explain what all these things mean before I load them, so at least you follow up. 1.5. So you know what market cap is. Market capitalization is the price of the stock multiplied by all the shares that the company has. So market capitalization simply measures the size, the worth that investors place in this company, the size of the company. The revenue growth rate. So for example, this store, they made a total of 1 million sales this year. 1 million naira from sales today, this year. So next year, you want the amount to increase to 1.1 million to 1.2 million. You don't want it to decrease. So the growth rate is simply saying that I want the annual revenue of this company to always increase by at least 5%. That is why I said greater or equal to 5%. Profit margin has to do with out of every 100 naira that this company made in sales, how much, after deducting expenses and taxes and everything, how much is remaining for them. So in this case, you say you want it to be 10%. So out of what, every 100 naira, you want the company to have at least 10 naira. Price to earnings ratio has to do with, okay, now the company made 10 naira this year per share. So each share of the company made 10 naira. How much should I buy the stock? Some people will say, okay, I want to buy the stock for 20 naira. In other words, you are paying times two of how much the company made. In this case, I say I do not want to pay more than times 15 of what the company made. Usually, you should go for something less than 10. But the market currently is currently in a bull run. For example, when we saw Presco was 19, right? Now look at return on equity. No need to bore you. Fetch the assets. Now, these are some stocks that match. Oh, we are still in the United States. Let's go back to Nigeria. So select Nigeria, then go back. So these are some stocks that match. So look at Aradel. It has a 100% score. Market cap, it passed it. Everything, it passed it. Ahead. Then look at Dangote Cement. Its score is 85.71%. While it passed everything, its price to book is 5.55. Recall, we said that the price to book, when you saw here, we said the price to book should be less than 5. So Dangote, that is what it failed. Then the Guarantee Trust Bank, its debt to equity ratio is 3.94%. So what this simply means is that the company has more liability than equity. Now, it makes sense for a bank. Why does it make sense for a bank? Because when you deposit money into a bank, that money, the bank is holding it, so it will be in the asset part. However, it is still a liability for the bank. It is not part of the equity. So for banks, most of the time, their debt to equity ratio is high. So when you say a high debt to equity ratio for a banking stock, you may choose to ignore, except it is too high. Do you understand? We scroll, look at Ikeja Hotel. So it passed everything aside from this market capitalization. So that is it. Now, if you say you want to filter out all the stocks that have a market capitalization below 500 billion, you can simply say that the market capitalization is required. So I just ticked required here, right? Then fetch again. So what happens now is that you will now see only the stocks that with market cap above 500 billion, as you can see here. So this tool is super helpful. Now, if you are a beginner, you do not know the type of stocks that you should buy. Simply put, you can use the AI powered screener and tell it what you want. So, for example, I am a newbie investor. I want to invest for the long term. Please give me solid companies that will pay me dividends. Right? So this is it. So let me just say testing, the name. Then let's generate it to see what the AI will recommend for us. Apologies if it takes time. Because of network, I'm using my network for this class, so it may take a little bit of time. But the AI will generate a screener for you. You can now go ahead to apply that screener to see companies that match the screener. You can even edit the screener. So, for example, if the AI is too aggressive in this, okay, it has loaded. So it says screener settings loaded. Apply or modify below. So if you want to apply, simply click on this button, or you can click on this review/change to see. So it says the dividend yield should be greater than 2%. The earnings per share should be greater than 0. In other words, the company should be profitable. The revenue growth rate should be greater than 0. In other words, the company should be having higher revenue. No need for us to review everything. Just apply the screener. Now, see companies that match. So we have BUA Foods, we have Aradel, we have Wapuko. When you review the metrics, so the AI was looking at dividend yields, EPS, revenue growth rate, net profit growth rate. profit margin, debt to equity ratio, then PEG. So that this is what the screener. You can go to the next page if there are multiple. If you want US stocks, you simply click on the United States, right? Then you apply. Then you see what applies here. So I don't know if this is clear. So as you can see here, you can always look at your show history to see the history that you've used for the AI. Then in your custom screener, after you create this screener, if you like it, you can go ahead to save it. So now I can save it as beginner friendly screener, right? I just give it any description of my choice, then click on save. So what happens now is that I can always come back to my history to see, right, the screener. So I don't need to generate the screener every time. I simply go to the history, then I fetch it, then I see it. It's that simple for you. And now you have more and more ways to make intentional investment decisions. So in conclusion, you want to start investing now and not tomorrow, right? No matter what you choose to invest in, you need to understand what is the risk, what is the reward, and join us on Access What for you to have a better investment experience. Once again, before we open the floor for questions, right? If you love what you see, etc., but maybe you do not have the time for yourself, especially if you are a long-term investor. After you make your annuals, after you subscribe annually on Access What, you can reach out to Benita or myself. We are chartered stockbrokers that we can give you the personalized guidance that you want. For you to subscribe, simply click on your name here, right? Select premium. Now, pay as you go is if you want to be deducted, right? Then this is the subscription, right? You see the monthly, then you can toggle for the annual, then you can go ahead to subscribe. That is it. So thank you so much, every and anyone. Joshua, are you here now?
Yes, I'm here now. I hope you can hear me clearly.
I can hear you. I can hear you.
Okay, thank you so much. Thank you, Rona. Thank you, everyone. I think it's time for us to move to the question and answer segment of this class. But before I move to the question on that was asked on the Google form, do anybody have any question to ask? Please, Isa, can you mute, please? Do anybody have any question to ask? So before we move down to the question that was asked in the group.
Yes. Good evening. Good evening, sir.
Good evening.
Good
Yeah, good
evening,
evening.
everyone.
Good evening.
Okay. Firstly, I want to thank you for hosting this webinar or this section, this learning section about stocks. I got the link from Twitter. That's how I joined, and I can't really recall how I joined or who I just saw something about stock, and I clicked on the link. But I joined late, so I don't know if I can still get more information and go through the video, or if it's recorded.
Yeah, the class is recorded. It will be shared from Monday.
From Monday. Okay.
Yeah,
Thank you very much, sir. Okay.
thank you.
Then when we are done with the class, how do we reach out to those people? How do we reach out to you guys for more inquiry or any lecture or
Also,
anything?
okay, sorry. So first of all, this is the Access What platform, right? Let's go to accesswhat.com. So simply go to accesswhat.com. So this is let me copy it. Please look at the chat box here, right? Look at the chat box. As you can see my screen, I am posting it here. So I have posted it. So this is it. Accesswhat.com. I have posted the link in the chat box, right? So you log in. After you log into the platform, look at it get started here. Just in case you want to join the Access What community, get started in this education part. You click on community. You can join our community from here. There are multiple groups in the community. Join the one you want to join. Or you go to contact us. So you click on your name here, then look at support. you can contact us here. So this is our email, this is our phone number, etc. Or you can always type your message. We will receive it. Then this, after you must have subscribed. I showed you how to subscribe: premium, subscription, annual. If you want personalized guidance, you reach Benita or Elijah. We are both chartered stockbrokers, and these are our phone numbers here. So it's totally up to you, however you want to do it. Thank you.
All right, thank you very much, sir.
Yeah, thank you.
Thank you very much. Adeyemi twins.
Good afternoon, everyone. Good afternoon, organizers of this class.
Sorry, I can't hear you properly. I don't know.
I cannot hear you properly.
Good afternoon.
Yeah, good afternoon.
afternoon,
Just that your
organizers of
voice,
this class.
this is better now.
Yeah, my apologies for that. I was on earpod before, that's why you couldn't hear that clearly.
Okay.
Yeah, you mentioned something while we were going on with the class. First, I want to say thank you to Mr. Rona and all of the organizing team of Access Words for this beautiful edition of the classes. Although I joined late, but I was able to follow up with a few things, and I hope to follow up more when the recording of the classes drop on Monday. Yeah, but Mr. Rona, you mentioned something the other time. You talk about the PEG ratio and the PE ratio. So I wanted to ask, what is the difference between both the PEG ratio and the PEG ratio, and how can we use those two indicators to make pre-informed decisions when it comes to stock investment?
All right. It's a nice question, actually. Please permit me to open my Google Sheets so that we can look at it. So let's say that in 2023, right? No, let's do this properly, right? 23, 2024, 2025, right? So we are looking at the EPS, or simply you can use net profits for this. Please pay attention. This is quite technical, but it's a good question that you've asked, right? So let's say the net profit that this company made in 2023, right, is 1 million. So 1 million. So in 2024, they made 1.2 million, right? Then in 2025, they made 1.5 million, right? So let's try to get for the purpose of this class, please, the actual metric I should be used is the compound annual growth rate, right? But because of time, we always want to keep to time here in Access Words. I'll be using the average growth rate just to simplify things, right? So in 2024, this company, they made a growth of how many percent? 1.2 minus 1 million, right? Divided by 1 million. So this is how many percent? Percentage.
0.2.
This is 20%, 20%. Then you move here, they made 25%. So on average, mind you, what we should be using is the compound annual growth rate once again, but because of time, I just want to simplify it. So on average, they made an average growth rate of what? Of 22.5%. 22.5%. So currently on 2025. So let's also assume that the company has 1 million shares. So shares, right, is 1, 2, 3, 1, 2, 3. This is still the same 1 million. So the earnings per share is simply this net profit divided by the shares. Let me make this a little bit bigger, right? So you can see it ahead. So the earnings per share, which is EPS, right, should be this net profit divided by these shares, which is now what? 1.5 divided by 1 million. So the company has an EPS of 1 naira 50 kobo. But the price of this company the price of this company is 5 naira. So what this simply means is that PE, what the PE will now be equal to this 5 naira divided by 1.5. In other words, investors are paying for 3 times 3, that is 3.3 times the earnings of the company. So search for that company on Access What, right? So maybe it's Presco, for example. So this is the EPS of Presco. So each share of Presco has 133 naira 60 kobo. But the price of Presco is 2,300 and something. So investors are paying over 17 times the earnings of Presco, right? Now, okay, coming back here, right? So this is for this company. So the question now, this is the PE. You want the PE to be low. But the thing now is that we can't really say that this company is overvalued or undervalued because you except you compare Cresco to Okomo Oil, then you look at the one with the lower PE. Or you compare this company we are currently analyzing now with another company in the same industry. If you want to decide if the company is truly undervalued or not, then you have to compare this PE with this growth rate. So PEG, that is the price to earnings growth rate. That's just it. So it will now be this PE, which is 3.33 divided by 22 point this thing. So mind you, the reason why it is showing like this is because this is actually percentage. That is 0.22. So what we'll do now is that we'll have to add times 100 to it. So as you can see here, it is lower than 1. When the PEG is lower than 1, you can say that the company is undervalued. If the PEG is from 0.75 to 1.25, you can say that the company is fairly valued. If it is higher than 2, you can say it is overvalued. So that is what we did when we looked at the fundamentals of Presco. Then it's up to you to add the PEG. If you also, for this one, we compare, let's come back to this Benjamin Graham, right? We compare the PE. You can also decide to add PEG, right? So it's now up to you to say you also want to compare the PEG. So saying the PEG ratio, right? You want it to be less than or equal to 1.25. Then analyze. So this is it. So this is Presto PEG ratio, and it is less than 1.25. So it is a pass. Do you understand? So when analysts still tell you that the Nigerian companies are still somewhat undervalued, they know what they are saying. Because when you look at our banks are trading in a PE of 3, 4, 5. Meanwhile, their United States counterparts are trading in a PE of 10, 9, even up to, okay, let's look at Apple, for example, AAPL. Look at AAPL's PE ratio, right? Look at Apple's PE ratio, 35.34. What about Tesla? Looking at Tesla, 251.11. So as you can see, the PE ratios are high. Then the PE ratio of Nigerian companies. So looking at MTN. Now, if you ask me as an analyst, I will still tell you, hey, wait a little bit. It's still somewhat, it's kind of overvalued, but see 18, right? Because now it is greater than 10, within the ranges of 10 to 12, which it has always been historically. So is that clear? Hello?
Yes, very clear, very clear. Thank you so much, Mr. Ronald.
Awesome. Thank you.
Yes, I
Okay.
have another question.
Okay.
Yeah, sorry about that. The question is what do analysts mean when they say that a company generate zero 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 profit but incurred big expenses? Let me explain. Maybe if you don't get it, I was reading from Nathaniel Dizu this morning, And then he was talking about Ella Lakes. Then he said that Ella Lakes, as of last year, I think he said it generated like up to 290 million profit, but the expenses, maybe
Not
expenses,
profit,
cost of
revenue. Revenue.
sir,
It's
sir?
revenue you are talking about, not profits.
Yeah,
Revenue.
yeah,
I understand what you are
revenue.
trying to say. So search for Ella Lakes on accessor. So first of all, look at the fundamentals. It's quite low. Look at the technicals. It's still in the hold zone. You can also analyze Ella Lakes with AI. If you click with analyze with AI, or you can come to research, right? Select the artificial intelligence. You can do whatever you want to do there. There are multiple options for you. But while we are here now, we so want to look at the financials of Ella Lakes. So view financial trends, right? So see the revenue, the way Ella Lakes has been. Revenue has to do with the total amounts that came into the company in terms of sales. In 2021, zero. 2022, zero. 2023, zero. And the reason is this. Ella Lakes have been planting trees that they will sell the palm. So as of this period, the trees have not started fruiting. That is why they did not sell anything. Then when you enter 2024, it increased to 170,000 naira. Remember, Benjamin Graham told you that you should only invest in companies as a beginner, that the revenue is greater than what? 50, 100 billion naira, 100 billion, $100 million, right? Now, this one is 780,000 naira. So, what it means is that some persons here were richer than what Ella Lakes generated in 2024. Down to 2025, Ella Lakes had a total revenue of 67.1 million. Now, revenue has to do with the amount that is coming in. Now, out of this money that is coming in, Ella Lakes have to pay their staff. They have to buy fertilizers. They have to buy more land. They have to, all these things that they use the money for. They need to buy for their generator. So these are expenses. Now let's look at what Ella Lakes made in profits, because profit has to do with after you deduct all the expenses, how much is remaining from the revenue. So as you can see here, in 2025, while Ella Lakes made around 67 million in revenue, their net profit is 1.6 billion. So they deducted way more than they made in revenue. So that
Yes,
is what analysts mean by the company may not make any amount in revenue, but they are still deducting money. Where is the money coming from? They have cash at hand in terms of assets, in terms of liabilities or loans, etc., that they can spend. Or this their public offer that they did. If it is successful, we don't want to assume that what we heard yesterday is right for now. So let's say that if it is successful, it means that they have cash, that they can continue spending, they can continue burning. It doesn't matter if they are making as much cash in revenue or not. If you want to learn more, you can quickly analyze it with AI. AI will give you more information or view the fundamentals. So look at the profit margin, negative, return on equity, negative, return on assets, negative. Is that clear?
yes, yes, very clear.
Awesome. Thank you. Joshua. Hello, Joshua.
Thank you. Thank you so much. Thank you so much. I think we're done with those questions. Okay, Precious Oji, your hands has been up, please. You can unmute and speak. Precious Oji.
I thank you very much. I really, really enjoyed the class. So my question is, firstly, how do we keep, like, for newbies like myself, how do we keep ourselves informed with the market trend, market news, and everything that is going on to be able to know when we should make or the necessary investment we want to make? Then secondly, I think this is from my own paranoia, being that I'm just starting. How are we able to like keep record and be able to, should I say, transfer our informations, our logins, to how will our loved ones have access to it in the event that we're not able to like have access to this thing ourselves? Something could happen. How how is
Yeah,
our
yeah,
our asset protected?
I
Thank you.
understand. Thank you. So I'll start by answering your second question, right? So long as you start buying shares in Nigeria, and maybe you register a Bamboo account or you register a Carrywise account, you must note that the stocks that you buy are not held by Bamboo. It's just like when you open an account in a bank. Yes, so you have a BVN, right? Likewise, in the investing community, in the investment generally in Nigeria, it is not the stockholder, it's not the stockbroker that holds your stocks. So you can buy some stocks in Bamboo, you can buy some stocks in Carrywise, right? We have the CSCS. That is what holds all your shares. So what happens in case, for example, you are no longer able to get all these shares? Your child or your next of kin or somebody who can be your administrator, somebody who can act on your behalf. So by administrator, I mean that, for example, let's say you pass away. The person who can be the administrator of your estate, all your holdings, the person who can manage them, right? The person can actually write to this CSCS and with the proper legal documents and everything that proves that number one, you are sorry, I don't know if you're a very religious person, but I'm sorry. That number one, you have passed on. Then number two, the person is indeed your administrator. Then number three, you actually do have these shares, right? So long as all these criteria are met, the shares can be handed over to the person, right? So I'm not just telling you based on I heard. We, myself and Benita, we've actually been helping multiple persons for now who have been doing this. At the present time, three persons are actually asking us the follow-up. But note that due to inefficiencies in the Nigeria matter, it may take time, but your shares are secured. You are the owner of your shares. Now, for the first question, that how do you follow up? So first of all, right, on AccessWorks is not just a platform that can help you to research a stock before you buy. After you buy the stock, you can simply click search for it, or maybe come back to Presco, right? I believe you can see my screen. In Presco, you can add it to your portfolio. You will select the portfolio you want to add, etc. You add it. Or if you don't want to search for this, so look at this plus icon at the bottom right of the screen. You click on it, then say add remove assets. You can add it to your portfolio. So AccessWorks can help you monitor your portfolio. So how we do monitor your portfolio now is that looking at this portfolio tracker, you have multiple recommendations. If you select a specific portfolio, for example, the platform can recommend to you if your holdings are good, if they are bad, etc. You can scroll more to see more. See news. Likewise, visit in this research tab, right? Oh, no, still in this portfolio, we have some utilities. So you can analyze your portfolio with artificial intelligence. If there's something wrong with the stocks in your portfolio, simply click on this first one. You see all the stocks there. If you want to find the specific asset in your portfolio that is the trouble asset, that is the asset that is not doing very well, this option is here for you. If you want to compare your portfolio with the S&P 500, with the NGX, this is here for you. If you want to set an alert, so maybe your portfolio is currently worth 150K. You want to get the alert when it is now reduced to 100K or it increased to 300K. This alert is here for you. So these are different utilities. Or to follow up in the market. Mind you, when you are tracking your portfolio on AccessWorks and something significant happens to that stock, you will be notified even before the news carried it. So people usually thank us when they see the information. So for example, if you follow up in the market, you know that Tony Elumelu is now in Seplat. If you were tracking your Seplat shares with AccessWorks, like you are tracking your portfolio, you would have been notified even before Nairametrics carried the news. AccessWorks uses they fetch real-time information, then send it to you. Or if you want to do it yourself, simply come to this market watch. This is where you see all the news in the market, right? Apologies if it's taking a bit of time, this network. I hope that you can hear. Okay, it has loaded. So you see the specific news. So look at this news. FCMB nears 500 billion market cap. you will see the stocks. If this button here you see here, if it is green, it means that it's a good news for the stock. If it is red, you know it's a bad news for the stock. If it is ash, you know it's neutral news for the stock, or you click on it to see. So Eternal is a top performer. So these are different ways to follow up. Like I always say, follow people who talk about these things online on Twitter or join the Access What community, right? So long as you have joined this class, if you want to join the community, please do not join this beginners group anymore because we will remove everyone from the group next week. You can join any other group that is suitable for you. Or you can still join the beginners, but note that we'll remove everyone from next week. So I don't know if I've answered your questions, Precious.
Yes, thank you very much.
All right, thank you.
Okay,
Joshua.
thank you so much, Precious. Thank you so much, Adeyemi and Hisense, for your questions. Then we're moving on to the questions that was asked in the group, so we get to wrap up today's class. So starting with the first question, says, how do I find penny stocks?
Find penny stocks. Okay, so by penny stocks, we are looking at the price of the stocks. Fine. You can come to Access What Hall of Fame page, right? In the Hall of Fame page, when it loads, apologies for the delay. You know that I use my network same in the class. So that is why it takes time. But just in case, okay, market cap. So you can simply do lowest to highest. So these are the lowest stocks in terms of market capitalization. But by penny stocks, we mostly refer to price. So let's select price, right? So price, then lowest to highest. So these are very cheap stocks, as you can see here. Let's say 50 per page. So you can see Prestige is currently 1 naira, 67 kobo. These stocks are very cheap. But the thing now is that are they worth it? So you can come to this fundamental analysis page because you do not want to get stuck in a stock. Just because the stock is a penny stock, you buy it, then you get stuck, right? That is not what you want. So in this fundamental analysis page, right? In this general markets, right? Click on choose the template, then select fundamentally strong and cheap. When they load, I will show you the metrics that okay, so we have two that match the criteria for now. So what metrics were we looking at? We said the price should be greater than 100 naira, the PE ratio less than 15, the price to book less than 2, the PEG less than 1.5, the revenue greater than 1 billion, the net profit is great, that is, the company is profitable, the profit margin is great. So as you can see, we did not just say because the stock is cheap, then buy it. We were actually also very strict with the other metrics, such as the revenue, the growth rate, etc. So when you see these two stocks here, Learn Africa and Veritas, their scores are 100% because we put required in each and all every metric here. You can click on review metric. So yeah, so these are some great ways to find fundamentally sound penny stocks. It is still up to you to use the screener or you create your own screener from scratch. Thank you. Joshua.
Okay, so the next question is there a limit to how much a stock can appreciate?
Okay, universally speaking, there's no limit to how much a stock can appreciate. However, in the Nigerian factor here, a stock can only appreciate or reduce by 10% daily for now. So if the stock's price is 100 naira today, the stock's price can never become 89 naira today or 111 naira today. So NGS caps it. So for those of us who are following the news about this Stanbic IBTC ETF 30, they are currently trying to do a price correction of the ETF, right? But they could not do it all at once. Sorry, if it loads, when you see the price. So, oh, sorry, I went to select the wrong one. Stanbic ETF 30. So look at it. Last day is 10%. So the price has actually been reducing by 10% daily for some time now till today. So yes, but aside from the daily cap, there is no universal cap. The stock's price can go from 1 naira to 1 million in 15 years, in 20 years, etc. Joshua.
Okay, so thank you. Someone with low capital, where do I start from?
If you have low capital, right? In as much I said that as newbies, we need to be very, very careful. Yeah, okay, yeah. So we can look at it from two ways. You can use your low capital to test the waters. So by the time you are becoming more, experienced in the world of investment, you can look for more capital and add. However, if you want to be aggressive in low capital, it makes sense that you start with what? You start with penny stocks. Let's look at this sheet again, right? Another one. So stock A, okay, let's just say ticker, ticker, yesterday price, then today's price, then the change, then the change in percentage. So let's say the ticker A is AAA, ticker B is BBB, right? The yesterday's price is 100 for ticker A. Then yesterday's price for ticker B is 1. But the today's price is 101 here. Today's price for this one is okay. So forget today. Today we have the 10% cap, but just for the purpose of this description, for this explanation, let's say there's no cap. So 2, yeah. What is the change here? The change here is exactly what is wrong with this one? So the change here is this one minus this one, which is 1. Same here. But what is the percentage change here? So we have this divide by yesterday's price, right? Times 100. So you see everything times 100, right? It's 1%. But this is 100%. So while the both of them increase by 1 naira, A is only 1%, B is 100%. Now let us assume that you as an investor, so you invested what? You invested hundreds, so you invested 10,000 naira. So let's have two different portfolios, 10,000 each. So 10, 1, 2, 3 again. So these are 10,000 each. This one will be for A, this one will be for B. Now, your 10,000 naira will be able to buy how many shares if the stock is 100? I'm with my calculator here, right? So 10,000, right, divided by 100. You would have been able to buy 100 shares. Now, this 100 shares is now 101 naira. So 100 times 101. Just to show you what I saw. Sorry, just to show you what I saw rather, would be this 10,000, right? Multiplied by, apologies, give me a few seconds. Let me remove this 100 that is here to quickly simplify things. I will use Excel's own formatter. Okay, percentage. All right. So 10,000, when you add 1% to it, what is it? Multiplied by, so 1 plus this, right? So your money, you're from 10,000, your money is now what, 10,100 naira. But when you do the same thing here, your money is what, 20,000. Why? Because this stock A that is 10,000 invested in increased by only 1%. Or this stock B that is other 10,000 invested in increased by 100%. So if you say you have mastered the market, but you have low capital, then you do not have business with high cap or very expensive stocks. Thank you, Joshua.
Okay, thank you so much. The next question.
Sorry, I can't hear you properly. I don't know.
The next question is: can investing be my main source of income?
So I just showed you how. If you want to invest into be your main source of income, you need to enter the markets properly. You have to understand market cycles, the different industries that can do well in a particular season. Do you understand? Then you mostly look at penny stocks, or if you're looking at the long term, stocks that will pay good dividends. We can also say, for example, if you visit the technical analysis page, right? General markets, their monthly winners, losers. So, for example, we'll soon enter the month of March. We are currently in February, right? So let's select, instead of February that is here, let us select March. So we have selected March. So these are some stocks that we usually see capital gain increase. That is, their price usually increases in the month of March. You can click on any one to learn more about it. So we are looking at Northern Nigeria Microfinance, but look at March, it's actually positive. When you look at it, in 2021, they made a 8.33% increase in the month of March. 2022, 18.57%. 2025, 8.57%. So this company has never made a loss in the month of March. On average, for the past 5 years, they have made 7.42%. So these are some ways, technically speaking. Remember, technically speaking, not guaranteed. These are some ways for you to see companies that may do well in a particular month. That is for capital appreciation. If you say it is dividends that you are after, when you come to the dividend corner page, right, you select the open dividend planner. Select the month of March. You will see companies that mostly pay dividends in March. So in the past 5 years, UCAP has paid dividends 3 times. You can see the history of how much they paid per month. So it's totally up to you to do what you want to do. So yes, thank you, Joshua.
Okay, thank you so much for your answer. How do we pick stock? That is, what stock do we sit? What stock do we sit on cash flow, balance, income statement? So the whole question around this is, how do we pick stock? And basically, what metrics do we look at? Cash flow, balance, income statement. I think that's what the question
Okay.
is about.
So yes, we actually organized the class on how to read financial statements where we handle those parts. But now you are simply asking which metrics do you want to look. So thankfully speaking, Accessor has given you multiple templates that you can consider. Mind you, you can always come to this education in this master classes. Select mastering stocks. You will see the different courses that are here to help you learn about stocks. But for you to see some metrics now in this fundamental analysis, if you use the AccessWorks own screener, you will see the metrics that we looked at. We look at book value, revenue growth rates, profit margin, return on equity, etc. If you want to use Benjamin Graham, etc., it's up to you. If you want to use Warren Buffett, you look at the different metrics that he looks at, right? Or if an influencer is telling you, you know one influencer that you like, you can simply ask this person. Or you know one analyst that you like, you ask the person, what metrics do you look at? The person tells you the metrics, then you can use this screener here, the custom screener, to create that screener. Thank you, Joshua.
Okay, thank you so much for your answer to that question. I think you would have to speed up the process. What exactly are the factors that determine increment in stock price that bring profit for shareholders, and what are the things to consider for a short-term trader?
All right, thank you. So during this class, we actually looked at a few components. For example, we looked at PE ratio, we looked at PEG, we looked at price to book, etc. These are actually metrics that are helpful because if the earnings of a company increase, the price of the company should also increase because the company is doing well. Likewise, if the book value of the company increase, the price of the company should also increase because it means that the company is bigger. But these are metrics mostly looked at by long-term holders. Now, this person is asking for short-term. So the short-term investor may want to look at the technicals. When is the buy zone? Thankfully speaking, we have the technical analysis here. So currently, Presco is in the buy zone, which means that Presco has been mostly bought this period. You can click on Presco to see some technical metrics. So learn more about technical analysis. You'll know what each and every of all these metrics mean for you to make the better decision technically, to know when you are entering or leaving a trade. But at the same time, right? So maybe we look at GT Bank. You can actually look at the technical analysis charts here on Access What, right? So you simply click on Show Technical View instead of Show Simple View. You will see a technical analysis chart that you can use to make better investment decision. Sorry, because of network, it may not load, but it will usually load here. Thank you. Okay, here it is. Thank you, Joshua.
Okay, thank you so much. The next question is, which stock would give me at least 100% in 225? 226, sorry.
You, uh, you can skip. You can skip actually. However, just for the purpose of this thing, right? Let's look at quick options. You can select View Advanced Statistics or simply Show More Metrics here. Then look at this CAPM return here. This is the expected, what we expect that the stock should bring. So this one is saying 28.98%. So if you see any stock that will give you to 100%, fine and good. Thank you. But it's not a
So,
very relevant question though.
okay, the next question says, when to buy and particularly sell as a long-term investor?
Okay, so as a long-term investor, you want to look at companies that consistently pay dividends, right? You want to look at companies that pay dividends, companies that are fundamentally strong. So that is what you should buy for, right? Now, when do you sell? First of all, maybe the company, according to some news, you are saying that they may not do as much as they were doing before, or their dividends is decreasing, etc. So as you can see, I'm looking at two different methods here. One from the point of view of the dividend investor. Another one from the point of view of the investor is looking at capital appreciation. The person looking at capital appreciation may no longer care when the company is no longer performing as much as it was performing. Why? Because the price may not increase as much as it was increasing. So yeah, thank you.
Okay, thank you so much. The next question says, how to spot a good stock?
Yeah, we've actually seen this one. Just search for the stock on Access What you see it. So try skipping the questions that we potentially answered. Thank you.
How to balance a portfolio?
All right, thank you so much. So how do you balance a portfolio? So let's assume now, look at it. Look at these two different portfolios, right? Let's bring this ones here. In day one, mind you, in day one, right? This was that is this one divided by itself plus this one. I'm coming, please. Yes, so you have this here, you have this here, you have this here, you have this here. So it's 0.5%. So these are 50-50%, right? What is it? Percentage. Yes. Now copy the same thing, bring here, right? But instead, apologies if we are taking your time because this is actually a good question that is being asked, right? So we have this one plus this one now, right? So I put this here, I put this here, right? So 3.5%. Now see what happens. In day one, the person had 20,000 naira in total. He put 10,000 naira in one company, he put 10,000 naira in another company. In other words, he spread his 20,000 equally. But in the next day, one of the stock increased by what? 100%. That is from 10,000 it became 20,000. So his portfolio was no longer spread equally. The portfolio is now spread 33% to 66%, what can the person do? If the person does not expect this stock A to perform exactly the way it has been performing, that is, it does not expect the stock A to maybe get the 100% as he wishes. It's now up to him to maybe take profit or collect some and use it to fund this one, or bring extra money and fund this one. Whatever I want to do is fine. But the entire goal here is that if he truly wants to maintain this 50-50%, he needs to either add to this one or remove from this one. Thank you, Joshua. We'll do more in the class. Like we'll create more classes to handle portfolio monitoring better. Thank you.
Okay, thank you so much. The next question, um, says, can I lose my initial capital in an equity mutual fund while investing on a long term, say 5 to 10 years?
If you are investing in a mutual fund and the fund manager is regulated by SEC, it is unlikely that you lose your capital, especially for the long term. It's quite unlikely for equity funds. By losing your capital, that is the money loss, or what exactly? Or it's decreased in value. It can decrease in value for the short term, but for the long term, it's quite unlikely, so long as that fund manager is regulated by SEC. Thank you. Let's take just one more question, Joshua, because of time. Thank you.
Okay, can I save my emergency fund in mutual fund?
Yes, the purpose of not mutual fund per se, money market funds, right? Because if you are saving your emergency fund in an equity fund, then it decreases. It's just like a stock. But your emergency fund is best saved in a money market fund that invest in short-term securities such as commercial papers and treasury bills, especially the money market funds that only invest in very risk minimal commercial papers. Those ones now, your money can be increasing gradually, but your money will never reduce, right? Because except there's a default. That is why I said very risk minimal. By risk minimal, the likelihood that the company does not pay back is very, very low. Then treasury bills. So as you can see, the likelihood that your portfolio is increasing rather than decreasing is very high for money market fund. However, the percentage increase is small when compared to equity funds. So for your emergency funds, you best save it using money market funds. Thank you.
Okay, thank you so much. I would have just loved to ask this one question, which says, can I just have 2 or 3 ETFs, VOO, SCHD, and VEA for life? I think
All right,
this,
let's search
yeah,
for them on Access Works. So it has this SCHD. So this
yeah,
SCHD is a United States ETF that they mostly pay dividends. So looking at their dividends yield 0.8, it may not look at much here, but for a US investor, it may actually be a lot. Also considering the fact that the ETF is also increasing in value. So this ETF is for dividend. Then VOO, this is an ETF that tracks the S&P 500. So if you are a long-term investor for US markets, then yes, this is actually one ETF that you should have, because the S&P 500 usually returns around 10% annually. As we can see here, this ETF is 12% annually, right? So what's the last one he mentioned?
I think that should be VEA.
VEA. All right. So this one is looking at developed and developing markets outside of the US. So this is quite risky. What I mean is risky is that they want to look for companies outside of US that they can invest in, right? So if you are looking for international exposure, yes, that is automatic country-wide diversification, then yes, you can go for it. But why I say it's quite risky, because it's easier to predict what will happen in a country and to predict what will happen in multiple countries. And as you can see here, the dividend yield of this ETF is 0.47%. The effective yield 7%, the risk exposure 9%. Now coming to this VOO, right? We can actually compare this VOO with the S&P 500, right? So come to technical analysis, select asset versus index, then search for the VOO. So observe if we go to, for example, correlation, let's look for correlation, right? So look at, it has a one correlation with the market, which means that this stock and the S&P 500, they move exactly alike. Let's look for example, VET-GRIP. That's vertebral gripping ETF that tracks NGX 30. When you look at the correlation, 0.1 is quite not very stable. So I want you to pay attention to this thing. I want to show you one secret in the market. Look at VOO. This is an ETF that tracks the S&P 500, right? Just scroll. Look at the correlation. When you see two assets having a correlation of 1, it means that they are perfectly aligned. Let's look for another S&P 500 ETF. Look at this SPY. When you look at the correlation, see 1 perfectly aligned with the S&P 500. Now let's look at the ETF that should be tracking the NGX, ASI, NGX 30. So we are looking at the, just search for 30. So look at this Stanbic ETF 30, right? Then look at the correlation, 0.03, neutral. It is not correlated with the market. When you look at the other one, VET-GRIP, so the nearer it is to 1, the more correlated it is with the market. So look at it. That one was 0.03, right? This is 0.1. So this one has more correlation to the market with that one. So now you want to ask yourself a question. How can an ETF that say is tracking the market, but it is not in correlation with the market? Mind you, if you search for a Nigerian asset, it will compare that asset with NGX ASI. If you search for an American asset, it will compare that asset with the S&P 500. So these are some things that you may now be wondering. But what I just show you now is not for newbie investors. So it's for more advanced analysts. Thank you, Joshua.
Yeah, thank you so much. I think that's where we draw the line for today. That's where we call it an end for today for the questions. Yeah, that's the last question. So thank you so much for joining us today. Thank you so much, Mr. Elijah. Thank you so much for the questions from Precious, from Adeyemi, and a whole lot of people. I think Joseph is still raising up his hand. Please, can you unmute so we hear what you have to say? Hello, Joseph.
Please unmute if you want. Okay, he has dropped his hands. Please, we can proceed so we can call it a day.
Okay. So thank you so much. And I would also say that this class was organized by AccessWorth, and AccessWorth is into the business of simplifying your investment journey. Anything around simplifying your investment journey, think about AccessWorth, and we are there for you. Advisory services, helping you to pick your stocks, to balance your portfolios, and also providing you with data that helps you make those better decisions. AccessWorth is always here for you. Thank you so much, and bye for now.